Inflation in focus as the Fed prepares for its final meeting of the year. Our next guest is here to give us a real-time read on the consumer. His company owns more than 260 restaurants across 22 states and says that the peak of inflation has passed us and consumer confidence is back. Joining us right now is Andrew Smith. He is Savory's co-founder. And Andrew, thank you very much for being with us. First up, tell us just what you're seeing in the restaurants right now. How willing are people to come into the restaurants? And when they do, how much are they spending?
Well, it's nice because we're actually starting to see people come back. I think that as we always think and say, bad times pass and tough times pass, and with Savory and all of our portfolio companies across the nation, we're actually starting to see traffic finally come back. So we feel like the American consumer is tired of waiting, and I think that they're excited to come back in the restaurants. We're seeing not only traffic come back, but also spending come back too. So we're actually seeing the ticket increase as well for what they're willing to spend.
When did consumers stop going out to eat? I didn't realize that there had been a real downtrend just based on some of the things we've heard nationally.
Well, I don't think ever. I think that this is something that people, it's really the third place for unwinding and connecting. I've always been a huge believer, and that's why I've invested so much into this industry and continue to invest into this industry, because people really want to break bread with their friends and families and colleagues across a table. And so it really hasn't gone down. It's always been an industry that's continued to increase and grow over the last 30 years. But there has been pressure. The inflation pressure on the consumer has been tough. They've had less money to spend. But the one thing that we have seen over the last couple of years is, as you guys have reported on as well, is wage inflation. For the first time, we've seen wages increase more than actually inflation has this last quarter, and we're feeling it in the restaurants.
Okay, so let's talk about that. Just the consumer's willingness to go into restaurants over the course of this year. When did it ebb? When did it start coming back, as you mentioned?
Yeah, we felt that it was definitely a little bit tougher in Q1, Q2. I think there was a lot of resistance to going out as much. I think the frequency was down. And then also what they were spending was down. I think that we saw tickets come down because they were either skipping the appetizer or skipping the drink, and they're sharing a meal occasionally when they come in as well. So the repetition of the customer or the frequency was definitely down throughout the summer as well. I think that when you're in an election year as well, as we've seen in the past, people tend to kind of just wait and see. I don't think it really matters as much which side of the aisle you're on, other than just you don't know what's going to happen, so you kind of sit on your fingers. But once the election had passed, or at least the nominee had become clear, people started spending. The last 3 weeks alone, we've actually seen an uptick over 2023 pretty consistently across the country.
So the inflation picture you thought really kind of peaked out and was not great from January heading into September. What changed in September?
I think that like I said, the inflation feeling had come down, and I think that consumers not only had saved money. We're seeing information from JP Morgan show that a lot of the American consumer had saved quite a bit of their money as they have had wages go up. They've had additional money to spend. And I think that coming into this last quarter of the year, we're seeing the money being spent not only on frequency, but of course on the ticket. So we feel confident going into 2025 that it's going to be a resurgence year, a stabilization year, because that's what we're seeing going into the end of this year. And as we listen to our consumer as well, the thing that we're hearing is not price. It used to be, Becky, that people were always complaining about price. Oh, things are so expensive. Your menu prices have gone up. And those that have taken too much price have also hurt their business because they're not seeing the traffic come back. Their prices are too high. So the thing that we're hearing across the country is people really are wanting to have speed and accuracy, which is the thing that they're most keen on. They want to make sure that they can get in and out of the restaurant or through the drive-thru as fast as possible because they're on the go. And then, of course, they want to have accuracy in their orders. And that's really an indication for me that it's not as much about price or inflation is not hitting the wallet as much. It's actually about them moving on with their life, which I think we all want to do.
Andrew, you guys have been growing at a really rapid clip. You opened 67 new restaurants this past year, and you're looking to open, I think, another 76 restaurants in 2025. What's most important to you just in terms of continuing that growth? Is it access to capital? Is it the rate you're going to be paying on the loans you take out on some of these things? Is it feeling just good about how business is in general? I know you're moving into 4 new states too, which is tricky. But what's most important for you to continue that sort of growth?
Yeah, it's always been our outlook to grow in kind of the face of headwinds, because when some people slow down, that's when opportunity presents itself. And so for us this year, it was a tougher year, but at the same time, we added units for all of our different portfolio brands. And this next year, we feel like it's going to not only be a resurgence year, but a stabilization year. And there's deals to be had too. I think that if those that can access capital, which we have access to capital, it's the time to grow. And I think that there's also been a lot of the older brands that have failed to listen to the consumer and to pivot and to refresh their brands, which I'm sure that you and I, Becky, have gone to many brands in the past that we kind of think, well, why have they done nothing to really reinvent themselves or refresh their brands? Those brands are kind of falling to the wayside. And I think in the emerging set, which is really where we play, those emerging brands are really starting to take a lot of the wallet share from those larger brands that have failed to do so. So going into next year, we hope to do at a minimum 76. We hope to have more opportunity to real estate, which is presenting itself. And again, access to capital is key. And we feel like with the interest rates coming down, that's going to provide a lot more opportunity, not only to us, but to each of our brands and to all other counterparts in the industry as well, which we've talked to. We talked to other CEOs of other brands, and we're all feeling like this is the year to start getting back to business and not playing in a defensive mode, but to really play in an offensive mode.